please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the market's doing rather well. 100 points higher on the Sensex, 42 points higher on the Nifty. It's just somehow not built on at 10,700. That's been the problem, of course. The Bank Nifty has been a bit soft today, and that's because both HDFC Bank and ICICI Bank have underperformed. HDFC Bank, of course, the number one component of Bank Nifty. ICICI Bank would be, I think, 3 or 4. So that also is not helping. Ashwani Gujral and Mitesh Thakkar with us for BTST calls. Ashwani, thoughts on index first and individual stocks?
See, one of the first hints of anything outperforming on the other side is you need to look for how the index performs during rallies. And the way Bank Nifty has performed, we are taking home short positions on this, and chances are that it should start outperforming on the downside once this rally ends. 10,700, the market has not been able to cross even after several attempts. So even right now, I think Bank Nifty you can get short on. More and more banks are now participating on the downside. Axis Bank is the most recent, which has given up all its gains. Yes Bank has given up. So hardly, 3-4 banks are now higher. So that way, I think banks are showing traction on the downside. Plus Nifty is now facing resistance at this 10,700, 720 zone. So stop is very close by. So with a day's high stop, easily short positions can be taken. As far as individual stocks are concerned, HDFC is now down almost 1%. So that's a sell with a stop of 1895, target of 1850. SBI is a sell with a stop of 261, target of 246. And Hexaware is a buy with a stop of 463, target of 482.
Okay, quite a few buy calls also on Ashwani's list. Mitesh, let's run through yours. What are you working with now?
So I have 2 more buy calls. RBL Bank, I think, again, is a stock which didn't correct much, and now I think it's showing strength getting past the recent high of 565. So take a BTST with a stop at 559 for targets of 578. And Just Dial has recovered very nicely. I think the strong candlestick with price and volume action tells you that there could be follow through. So keep a stop at about 555. Look for a 575, 578 kind of target in a day or two.
Okay, that's of course some buys and sells. Just a couple of other stocks moving to the high point right now. We have Adani Power. I mean, and now these may not mean too much. It's just perhaps some short covering because some of these stocks have gone down a lot. So today has been a kind of day where just playing short covering may have helped. DHFL has moved to high point. Remember, yesterday it was one of the big losers. So again, the move on DHFL may not mean much, but for whatever it's worth, today it's made high point. Ajanta Pharma, that actually has been one of the strongest stocks today. So that's made a move. Ashwani spoke about Hexaware. A couple of other stocks are moving to the high point. Mindtree is interesting. Let's just pull out the intraday chart of Mindtree. That stock making high of the day. The strongest stock, of course, has been Infosys. That really has been the big support point for market over the last 3 or 4 days. And how swiftly the stock has moved to 1350. Just a few weeks back that we're talking about this stock underperforming so much, but now it's compensating and seeing a big move, so moving towards the high point. Of course, the problem for the market today has been HDFC Bank, and that one is still down quite a bit. There are others as well. Let's just pull out. Yeah, sorry, tell me.
No, Anuj, I just wanted to add, not that it's a big market-making sector, but for what it's worth, traders, I think, are having some, fun and games with fertilizer stocks. All of them are suddenly higher. Let's just pull up the intraday graphs just to show you the kind of spikes we're talking about, whether it's an NFL, whether it's RCF, doesn't matter which, Madras Fertilizer, whichever stock you're looking at, from big to small, all of them are surging. Fact is up suddenly 3-4%. So that's just GNFC, GSFC, all of these stocks are getting. Now, Chambal is the one that's actually not moved, but all the others are getting excited, I think, is participating in the mid-cap moves.
I think the lower the quality, the bigger the rally. If you see today's rally, you spoke about Madras Fertilizers. And frankly, what is there to buy in that? But that is market for you, of course. Today you've seen that play out. So good luck, doing well. But on the Nifty, it's 10,695. is what we have right now. So there's a bit of a struggle around the 10,700 mark. Let's get in some global market opinion then from Mark Mobius.
There's some global views coming in from Mark Mobius. We'll take a break on that note. We'll be back with more market talk on the other side. Welcome back. Well, it's the same story. The banks are kind of dragging out today. The likes of ICICI Bank, SBI, HDFC Bank. You can perhaps put the blame on these biggies. And HDFC itself has not had a tremendous day, still in negative territory. So these are some of the drag points in today's action. Pharma is actually still holding on to most of the gains. So Reddy, Cipla, Sun Pharma, your trio of top pharma names, find traction in the market. Well, on that note, let's welcome in Anand Tandon. He's joining us on this leg. Anand, thanks for joining in. First thoughts on the sluggishness that we are seeing in the HDFC twins of late. What would your view be? Are they still sort of a buy on every dip for you, both of them?
Well, for any decent term investor, if you're looking at a few beyond the next few months, I think you would continue to hold it. If you're a foreigner, obviously there is an issue. If you sell it, you may not be able to buy it back. And for the domestics also, it's most consistent performers. So no particular reason you want to get out. Yes, if you're trying to time the market, then I would think that you may get a bit of correction from here. But if at all there is any stock in the market that you want to continue to hold on, I would imagine it's the HDFC twins.
Okay, mid-cap IT is really, revving up now. Just look at some more stocks. Tata Elxsi's intraday chart should come up for you. Earlier, of course, we spoke about, Mindtree and Hexaware. Tata Elxsi, look at that move on Tata Elxsi, 1.7% higher is what we have. Let's pull out NIT Tech as well. Normally, these two stocks move in tandem. That, of course, is the mid-cap basket. That one also, I think, is making a bit of a move. Yeah, you can see that. So 1% higher on that. So this space having a bit of a run here. Anand, good afternoon. Infosys has been the big mover. Of course, we have seen TCS make a move. This IT rally is back, you think?
Well, it has been for a while now. Last few months, we've seen very strong outperformance from this sector. And so long as the view continues that the rupee may continue to be weaker and the US market continues to be strong, presuming that there is no further upsets from Mr. Trump in terms of putting some more restrictions on Indian exports, I don't see any reason why you should be worried about IT at this stage. Continues to remain cheaper than the rest of the market, of course not growing very handsomely. But the likelihood is that the growth from here may actually pick up a bit, whereas the valuations is still within reasonable range. So yes, I think IT continues to remain, at least for me, quite among the favorites.
Anand, I'm going to go back to a bank stock, this time ICICI Bank, because there was this big hope trade that was building that maybe now the stock will really punch through the 300 level because cleanup is underway and perhaps we'll see management changes as well. But again, every time this stock kind of flatters to deceive, and again it's gone back in a trading band. What would you recommend on it?
So, my view is that corporate-facing banks is the place that you want to be in going forward, especially if you overweight on the consumer banks, which I presume most people are. So, I think it is time now to look at moving into the corporate-facing banks. And I think, except for State Bank of India, if you look at the private sector, the only place that you could be actually in ICICI. As you mentioned, I think perhaps the worst is behind you in terms of actually both the management change, which is now very likely, and also the fact that the cleanup should at least be 70–80% done. You may find one more shock coming through, but aside from that, I don't think that there are too many hidden skeletons anymore. Valuations is also not very, not very expensive at this stage. So on all counts, I think on a 2-year view, ICICI will likely perform perhaps better than the rest of the market.
What about Tata Steel, Anand? That's the one where we have seen quite a bit of volatility over the last 3 or 4 days. The Thyssen Group deal is now done, but the questions which are being raised is, are we closer to the end of the steel cycle or, high point of steel cycle?
Well, we are at the high point, there is no doubt about it. The question is that how long will it extend? Frankly, I am no great fan of what Tata Steel does, and if you were to use them as a contra-indicator, the fact that they've gone and bought some more local steel tells you that the cycle is about to topple over and die. But cynicism aside, the reality is that the prices are likely to remain firm because the government is actually putting tariff barriers, and the rest of the world governments are also doing the same. So given the fact that the Indian domestic demand looks reasonably robust, I think the only joker in the pack that can upset the apple cart to some extent is the fact that much of the capacity that was mothballed because they were run by companies which did not have capital is now likely to come through. So many of the analyst reports, of course, are already beginning to factor that in. But I think as usual they will probably overestimate demand and underestimate supply, and I would argue that the supply shock can be fairly steep if and when these companies actually start producing. But till that happens, and I think that's at least a couple of quarters if not a year away, I think the demand-supply gap is in the favor and the prices are likely to remain robust. So at least for this year, I think earnings from steel companies in general and Tata Steel should be quite good.
Okay, well, that's Tata Steel for you. Stocks holding up today. Some of its peers like Vedanta have had a far rougher session. Vedanta has undone some of its yesterday's excitement. That stock's down 3.5%. On that note, let's move to some more market opinion. We caught up with Pradeep Shah, chairman and founder of Indasia Fund Advisors, in the morning. He believes that the uncertainty with respect to 2019 general elections is weighing on the market.
All in all, there's good progress in this public sector banks' problems. There is an inflection point that the public sector banking system has reached. They've realized that the past way of working cannot work, and this Sunil Mehta panel is indicating how it should be done. The focus is on governance, focus is also on asset quality, growth with profitability. I think, and there is good talent, by the way, in the public sector banks. So given a little bit of governance tightening, I think the banks can emerge well out of this problem. The Indian economy is giving very good and positive signals, but the global economy and global politics is not giving good signals. And I think we must recognize also the Indian political situation that is causing some concern, that elections looming, whether this present government will come back with the same kind of majority or will come back in the first place if you believe some people's, to that effect. So I think that uncertainty is weighing very strongly on the markets. And I think if that uncertainty were to be addressed in some way, if Prime Minister Modi's government takes positive actions which re-energizes that faith that they had gathered from the public, I think it would be wonderful for the markets. The autos have been doing extremely well. We saw the results of the June month in terms of sales volumes. Clearly there is pent-up demand, clearly there's a felt need for two-wheelers to four-wheelers, and so there is continuing demand with the last 2 years of good monsoons. This year if the monsoon is good, then that momentum can continue. I think for those who want to outperform, those who want to get better returns, there may be opportunities coming forth in the lesser flamboyant scripts in the mid-cap space going in the next few weeks, I would think.
Welcome back. So we're still looking at similar levels, 10,700. For what it's worth, Anuj, I mean, today, right now this level is holding. We've been discussing this, right? One day it's Reliance that comes and saves the day for you. One day it's tech. I guess today, what, tech and pharma?
Tech and pharma. And I think what is interesting is that has pharma resumed that rally? You remember that we had that big rally on pharma. After that, I think for the last 3 or 4 days, there was some consolidation. Let's just, for example, pull out a 2-week or 1-month chart of the Nifty Pharma, because we had that big top-down move on that sector. After that, some of the big stocks also cooled off a bit. That's the one. You had that move, then you cooled off. Today, I think you're taking out that day's move or that day's high. So that way, I think that pharma move might be resuming. Its chart is very similar to the IT chart of last year. So that way, I think it's interesting. And most of the pharma stocks are rallying, led by the big ones like Sun Pharma, Aurobindo Pharma, Dr. Reddy's. So perhaps that rally is resuming. But the way HDFC Twins have behaved today, that's a bit for, if you're a bull, you just want to keep an eye on these two stocks because there's a bit of a slip that you've seen. HDFC Bank, we've spoken all through the day. Even HDFC, I think, is now closing at the low point today.
Yeah, absolutely. Actually, let's see if we can connect with Ashwani on these pharma stocks. So, Ashwani, on pharma, what is the sense? As Anuj is, he's raising a very valid question. Is the uptrend itself resuming after 2 or 3 lull days? And in which case, which are the charts that you like the most? Sun Pharma, Supplement, Reddy's, everything is up today. What would you go for?
See, this is an exporter move. So now that IT has been not falling and moving higher, probably the market expects the rupee to weaken further. So hence, the pharma move is resuming. Basically, it's, initial move is across the board like IT. All IT stocks are higher. Similarly, pharma, oro, Ajanta, all sorts of pharma stocks are likely to move up because the tailwind of the rupee is there. And similarly, on the other side, you have, banks which are going to remain weak. So on a net basis, we are going to still be stuck in a range. So there's enough on both sides to keep the market range bound.
Okay, Anand, I wanted your thoughts on the developing story on the Tata Group. You have both Tata Global and Tata Coffee as the two of the top gainers. Your thoughts on whether this is a good space?
Well, the company, Tata Coffee especially, has not been something that has performed anything great over the last many years. Of course, the thing is that now you are looking at a consumer angle coming through there, and retail is something that the market likes quite a lot. So to that extent, the coffee business can do reasonably well. Frankly, the main theme in the Tata Group was reallocation of capital and better use of capital. To that extent, the entire Tata Group has to some extent re-rated, barring perhaps Tata Motors. If the use of capital theme continues for a while, I think there is ample scope in many Tata companies. But I think that you're already beginning to see reallocation of capital in terms of expansion and less of a focus on ROE coming through. And if that were to continue, then I think you'll pretty much get a strong underperformance from the group overall. I think the fact that the domestic market is picking up will perhaps give you space to grow in things like Indian hotels, because that's a space that is beginning to show signs of life. And of course, there is a possibility, as we talked about, of Tata Steel doing quite well. But for the rest of it, I think till they do a much major cleanup and refocus on the ROE, I would still be hesitant to take a really serious call on them.
Erratic trading moves on a stock like PNB. It's all over the place, this chart. We just had 5-10 minutes back, there was a bit of a spike. Now there's a sell down. Net stock still negative. In fact, if you pull up any of the PSU banks today, there's been absolutely no excitement with respect to this AMC AIF plan. Let's take that conversation and other market facets forward with Prashant Prabhakaran of Yes Securities. Prashant, you've never been a big fan of PSU banks anyway, but thoughts on, let's say, the likes of ICICI or SBI, the big corporate lenders, would you look at buying them now with so much focus on resolution?
So, frankly speaking, the corporate cycle is just around the corner. It will be turning around at any point of time. This, unfortunately, if what happened a couple of quarters back hadn't happened, then this rally would have already happened by now. So, having corporate banks, but looking at a longer time frame, is the right way to play this markets, at least for the next couple of years. So, ICICI, SBI, which have large corporate books and fairly stable books, quality deterioration that has happened and the write-offs that have already happened. I think so they are buys, they will be long-term holds, but they are not going to give you immediate results into your portfolio in the short term.
Okay, while we're on the subject, let's play out views that we got from a whole cross-section of top bankers on the government's latest effort to deal with bad loans, the concept of an AMC and, of course, AIFs that will take care of bad assets.
There has been discussions and testing of the market, if you will, and the response is reasonably positive. Therefore, on that ground, we feel that there is the ability to raise the funds for the AIF to then be able to buy out the assets. Now, this is an open architecture. It doesn't involve only one AMC, one AIF, so we expect that there will be several participation. Now that we have created a framework by which decisions can be done and a logical process of bringing it to the AMC, AIF to happen. So that really is what it is. So there is a fair amount of confidence the funding is available. We put it this way, that the bulk of the funds all money will be institutional money. There are set of extent rules on participation in AIF, and within the context and within the risk appetite, Bank of Baroda will certainly participate. As I said, it's an open architecture. There will be participation by this particular AIF as well as with others. We will take it as it comes. As far as the AMC is concerned, there is absolutely no government involvement of any sorts. Now, we're talking about a fairly small size capital for the AMC. So the sense is, therefore, it should not be difficult to raise the fund. I think the larger question is the talent pool in the AMC and getting them. And getting a quality team in place that can then help and roll out this process. I think that's a larger challenge than setting up the AMC or raising the 20 crores of capital or 10 crores of capital, whatever that initial number be.
The appreciation of these assets in the next 2-3 years is anticipated to be good. So we will have a lot of investor interest. That is our a feeling and a belief. At this point of time, actually, we may not be getting the right price. So if you are able to wait for 2-3 years, definitely there will be good appreciation in these assets. It is not one asset. There are few assets which are identified. So where some discussions were going on for some time, so can be placed in these AMCs. I strongly believe that it will happen in this quarter. Liquidity is not a problem in the system. It is the problem is only the capital.
Yeah.
So liquidity is abundant in the system. So, and there are banks which are capable of doing a decent investment in this AMC. And we are not depending on banks only. So please do not classify it as a bank investment purely. We see that at least 75-80% of the money will come from other investors.
Okay, by the way, there's a bit of a rally once again happening on the Nifty. So we're going to close above 10,000 mark today. I don't know if the averaging would mean that the final closing would still be about 10,700, but there are a couple of stocks which are now leading the market higher. Just pull out the intraday chart of ITC. Now, whole day we haven't spoken about this stock, but just look at that stock. There's a reason we don't talk about this stock, because if you see year to date, it's 1%. So it's just been in this band for a long time. But right now there's a bit of a move happening on ITC. Ashwani, random move, or is there something here? 1%, but it moves the index.
See, if you see, it's been doing this range of 255 to about 285, 290. So bottom end of the range, a bit of a pickup from there. I don't think there's too much to read into that.
Okay. Prashant, what would your view be on some of the consumer stocks? Which, just 2 minutes to close, so very quickly, I'll just take a very short call on United Breweries. Stocks up 5% today.
So talking about consumer stocks, actually discretionary consumer space, we have been tracking. We like on that side.
Okay, I think, Prashant, we anyway have a slight feed issue. We're also running into market close. We'll take that later. But for how we're ending right now, Anuj, 1% up on the mid-cap index, Nifty 10,700. How would you read today's action?
The way we were losing Prashant's feed, I think Mumbai's rains, just telling you, perhaps, try to rush home after the market's close to be. But in terms of market, I think the Nifty has done well today. The mid-caps have done well today. The Bank Nifty has been a bit of a problem. But on the Bank Nifty, what's interesting is I'm just looking at the futures data, and there you're seeing a bit of a pickup towards the end. In fact, the Bank Nifty future is closing at a decent 45-50 point premium right now, which has been a discount over the last 3 or 4 days. That is quite interesting. But on the Nifty, today the two key support points were IT and also Pharma. So Pharma stocks like Cipla, Lupin, Sun Pharma, they did well. Infosys, of course, has been a strong stock. That was up about 1.5%. This year, Infosys is up 30%. So it's been a big move. Couple of other stocks which look good. Maruti was up about 2%. Maruti is showing some signs of bottoming out. It's 200-day moving average. After that, it's been a one-way move, of course. So that's something that you want to keep an eye on. 200-day moving average has been 87.50, and it's moved from there. BPCL and Tata Steel were the other gainers. On the way down, HDFC and ICICI Bank really dragged the markets a bit, along with HDFC Bank. Vedanta, of course, was the big loser, down about 3.6%. But let's see. 10,700 is here. 10,740 is the 20-day moving average. Will be interesting to see if we take this out tomorrow, Surabhi.
Okay, well, on the mid-cap side, not too bad. I mean, there's some green that's sustained throughout the day. Finally, the index is going home with a gain of 160 points. That's the close for you. The breadth is absolutely even, Stephen. One stock up for every one stock that's down. That's been the kind of market breadth that we've had today. On the gaining side, I'll start off with some of the pharma newsmakers because pharma and IT were the themes even in the mid-cap universe. So Ajanta Pharma, Strides Shasun, Divi's, we've even Granules for that matter. We've got a gain of 2 to 4% depending on which stock you're looking at in this entire basket. Mid-cap IT is worth noting. So interesting moves on an NIIT Tech, finally about 1% on the higher side. Mindtree 1.5%. Hexaware, Tata Elxsi, some sort of gains continued here. Now that I'm talking Tata, let me talk about the big movers and shakers. 12.5% up on Tata Coffee, 6% up on Tata Global Beverages, on some expectation that maybe we'll see some M&A action, or basically some business realignment within the consumer parts of the Tata Group. Other names like Rallis India, Tata Investment, Tata Sponge, Tata Metallics, all the Tata stocks were up and about today, including a Voltas actually, 2% on the higher side. If I move on, then some of the other key gainers would include stocks like Just Dial, Delta Corp, 5 to 6% up on these names. Some buying on some of the financials like Repco Home Finance, RBL Bank was up about 3.5%, 4%. M&M Finance had a decent session for itself. So these were some of the major gainers. Now let me come to the losing side of the screen. PSU banks, well, no excitement in the market with this plan. PNB itself is down about 2.5%. If you're looking at some of the other names, most of them, IDBI is of course down 6%, but even the others, IOB, Canada, UCO, not much traction in the entire PSU banking universe. A stock that was rallying very, very sharply yesterday has fallen equally sharply, and I'm talking about matrimony.com. So just keep that on your radar as well. 8K Miles has lost another 20% despite the management's clarification that results have not been delayed because of auditor issues. The market has its own mind on these things. And Avanti Feeds has lost another 6%. So I think it's absolutely even, Stephen, on the mid-cap side, Anuj. When I'm looking at the gainers, are in some interesting big stock, but equally big losers as well.
Yeah, I think today's index is not revealing the true picture. Advance decline is 1:1. 1,053 advancers and 1,039 decliners. The index is up about close to 166 points because a couple of stocks have made a big move in the mid-cap index. A couple of Tata Group stocks, for example, they may have some large weight on the index. So that could be the reason. 8K Miles really stands out. 36% gone in 2 days. Ashwani, what's the verdict then for the day? 10,700. By the way, 10,699.9 is the adjusted closing that we have now.
Well, it is a weak rally, 45 points, 50 points from, a very strong lower end of the range is not very comforting. What you can say is that IT index is ready to break into new highs. So if you have to buy, you buy pharma and IT. And if you have to sell, probably sell into banks and the domestics here. This mid-cap rally, maybe one more day and that should be over. So broadly we remain in a range, but within that range there are sectors which are in an uptrend and others which are in a downtrend. So that way you have to see whether you want to play the downside or the upside. But decisive, Nifty or Bank Nifty, I don't think any clear moves have been made.
Okay, well, just take a quick final question with our other experts as well. Anand, your thoughts and on the mid-cap side in this big fall that we've seen, any of the key quality names where you'd recommend a fresh entry? Because, sometimes it's these falls that also offer us the best opportunity.
Well, I think, some of the construction companies and cement in particular are two areas that I think have given you enough of a fall to merit some attention because the outlook for them continues to be good. Of course, there is some latest news which says that the infrastructure spend is likely to be behind schedule now, and more importantly, the overall spend of the government is falling short by a couple of lakh crores. So if that were to be true, then of course there will be a bit of a hiccup. But I think for now it does look like the order books justify a higher valuation.
Okay, all right, gentlemen, thank you very much for being with us on the show today. We'll take your leave and we'll catch you again with the markets soon. Quick break on that note. On the other side, excerpts from our exclusive conversation with former HUL chairman Harish Manwani. Welcome back. Here with Closing Bell. Tata Steel and ThyssenKrupp have signed a definitive agreement to combine their European steel operations. The 50-50 joint venture will create the continent's second largest steel company. Tata Steel's Kaushik Chatterjee tells CNBC TV18 that ThyssenKrupp joint venture will be EPS accretive as 50% of the company's profits will flow into Tata Steel India. He was in conversation with Nisha Podar and said that the full synergy benefits of almost 400 to 500 million euros will start flowing in over the next 2 to 3 years.
I think, this is a collaboration and a partnership that has been built on a very strong industrial logic and footprint. And I think the Indian shareholders and the company will be in a much more financially robust position. Not only are we going to look at deleveraging on the deconsolidation of about 2.5 billion euros of debt, we will have consolidated interest costs which will come down by about maybe 1,000 crores. We create balance sheet appetite for the growth in the Indian business, and therefore I think it will certainly have an earnings accretive position. Not to mention about the fact that as a 50-50 joint venture, when we account it on an equity basis, we will have the earnings of the joint venture company, and with our expectation is also that it will be a free cash flow business from which the shareholders will be duly serviced.
So you've said synergies of 400 to 500 million euros per year. Is that expected to clock in from the very first financial year of your operation as a merged entity?
So I think there are certain synergies which has the potential to start faster than the others. For example, there are ones which are the procurement synergies and synergies on account of the network. These are the ones which will come in possibly first, and then there are synergies which will flow in as we go along. Our estimate is it will take 2 to 3 years to mature on the numbers that we have guided for.
You said that 2.5 billion euros passed on to the joint venture that will be deconsolidated from Indian entity. So that means 20,000 odd crore rupees going from your overall net debt that you left in the end of FY18 at 86,000 crore rupees. So that will reduce to 66,000 odd crore rupees. But then you're also buying out Bhushan Steel, where you've said that you're taking a debt of 16,500 crore rupees. What are your plans for debt management? Are you comfortable with these levels? And with this debt on your books, would you still pursue Bhushan Power and Steel?
So I think if you have to look at the Bhushan Steel acquisition, this has been done on a very prudent capital structure. We've contributed about 18,000 crores of equity related from Tata Steel and about 16,500 of debt. For a 5 million plus ton facility with very strong asset configuration, especially on the downstream, and a market presence. We are replacing debt with the acquisition of fundamentally strong Indian operations, as in the acquisition in Bhushan Steel. Bhushan Power, I can't comment because it's currently in the court.
Okay, that's the word from Tata Steel. Moving on now, outgoing chairman of HUL, Harish Manwani, spoke with the CNBC TV18 in his first TV interview in a decade. He's, of course, bidding adieu to the company. Listen in what he had to say about his second innings and his advice to the present top HUL management.
Well, Sanjeev and the team are doing an absolutely outstanding job. And my tip to them, please keep doing what you're doing, a little more, a little better, every day. And at the same time, my other tip to them would be, this world is not going to be the same as it is today. So make sure that you're also doing some things differently tomorrow and day after.
Will you continue to be a mentor or advisor at HUL? Will you just be a phone call away if the management needs you?
First, I will be I will be cheering HUL from the sidelines, because I think at the end of the day, I've spent 42 years in this company, and I think it's one of the best companies in the world. Not one of the best companies in India, it's one of the best companies in the world. And I will always remain a well-wisher of this company. In terms of advice, sometimes I believe that if you voluntarily begin to give advice, you can often slip back to the past. It is really important that companies move on from where they are today. I have full confidence that the time that I have spent here, there is enough that I have been able to contribute, and now frankly I think the company is in great hands. If obviously anyone from the company does reach out to me to hear an anecdote or two, I'd be very happy to share it with them, but otherwise I personally think they're on their own and they can do a great job of it.
So what do your second innings look like then? Taking more holidays? What do you plan to do?
My second innings has already started, so no, I don't plan to take holidays, because as I said in one of the other interviews that I'm changing track but not changing pace. I do believe in keeping busy. I'm busy doing many other things. I'm on some boards of companies. I advise Blackstone. I'm their operating partner there. So there are so many other things that I'm doing, and I'll keep myself busy. But in all this, what I'm not going to forget is that there is one company that will always be special for me, and that's this one.
On that note, we're going to do a very quick rapid fire. Are you ready?
Of course.
If you are not at HUL, then?
I will be somewhere else taking a little bit of HUL with me.
A job offer that was very tough to resist?
None so far.
Okay. Your secret sauce for success. What do you think is your mantra?
People.
Life on weekends.
Relaxing.
Yourself 10 years from now.
10 years older.
Okay. Your favorite HUL product?
Dove.
Choose between the two. Cornetto or Magnum, your favorite?
Magnum.
Pears or Dove?
No. Dove.
Pepsodent or Close-Up?
Both.
Consider doing the next Dove ad, Mr. Manwani, with the fabulous looking skin, might I add, over there. All right, on that note, we'll take another quick break. We'll have Manisha Gupta joining in with all the currency and commodity market action. Welcome back to Closing Bell, and let's chat about commodity space now, where there's plenty happening in agro, non-agro. The MSP is expected tomorrow, so there's no dearth of news when you look at this sector. And of course, there are enough and more global cues which are keeping the markets jittery here. Let's start with platinum then, and there has been a sudden move on to that one in last 24 to 48 hours. We have seen a 10-year lows come in case of the platinum prices. It has been trading on discount to gold for some time now. Earlier, it used to be platinum, which was more expensive, more niche, and the gold prices were on the weaker side. But that really has turned around for some months now, where you have the platinum prices trading very close to $800 per ounce, and you have the gold prices trading at $1,240 per ounce, as we have seen them in the European markets now. Well, the reason that the platinum prices have been on a constant decline, one, of course, is the kind of auto numbers that we have seen, the supplies that are into the market, and of course, the recent auto tariff war that we see happen between US and Europe. Germany essentially is something that really seems to be weighing on to this space. The strength in US dollar is yet another factor. So add it all and you can see that reaction come in for the platinum prices. The good point though is that there are reports that as the prices decline, you might see some support come in. India actually imported 46% higher last year as compared to 2016, and 2018, and in that sense has been forecasted as a better year. There also is a report out from Platinum Guild which says that they are looking at the platinum demand growing by 20 to 25% for this year, as in comparison to the previous year. So there are some stronger numbers coming in expectation, but at this point in time, it really is tackling the kind of decline that we have seen in prices.
Let's get in then. Gautam Choksey, who's Executive Director at Hindustan Platinum Private Limited. He joins us on the phone line to talk more about that. Gautam, hi, good to have you. First of all, what has been your reading in prices? Because we have seen a one-way street and that has been really on the weaker side.
Yeah, absolutely. And as you said, the US-China trade friction is causing concerns and declining physical demand. We've seen platinum dip under $800 today briefly, and trading at about $820 now. Whereas, for this to translate into a higher demand for jewelry or investment demand in India, probably may take some time, or even for the industrial demand. But yeah, the whole precious metal complex is under pressure. I mean, silver is also under $16 an ounce as we speak. So.
Oh, well, absolutely. The whole sector, that is the precious metal sector, has been under tremendous pressure. But Gautam, tell me more about platinum. What is the trend that you've seen in the Indian markets? Is there more acceptance now? Because until now, it has been treated as a very niche category. Not too many people buy it. The resale avenues have been slightly tighter as well. Have you seen the Indian markets open up to platinum?
Right. As you were saying, the platinum has been at a discount to gold for a while now. And at today's price, with today's decline, it is 1/3 cheaper than gold. So it's 67% of the price of gold, when it's always been positioned as a metal which is higher than gold. So I guess a lot of people don't follow the platinum prices and hence are not aware. But we're probably close to the cash costs for mining companies for platinum. So it could probably go a bit further down from here, but I think with a longer term perspective, the returns for platinum, for investment in platinum, could easily outdo gold on a percentage basis.
That is good to hear, Gautam. But what really has been the demand strength in Indian markets, really? Because the last year numbers are 7.2 or 7.6 tons of import into India as far as platinum goes. How are those numbers looking to you? What kind of demand patterns have been seen?
So auto demand, of course, is there. Investment, I think, and jewelry should pick up this year as well.
Okay.
Should be better. But yeah, I think overall, as more and more, as Platinum Guild is also, creating awareness of platinum jewelry with various ad campaigns, it's definitely going to increase over time, at least in the urban areas.
Gautam, one word really on the jewelry part of it as well, because while we were checking with the market really, when you look at the metal to metal cost, platinum is at a discount as we've been talking about. But when it comes to platinum jewelry and gold jewelry, the prices per piece really are quite similar. How would you read into that? Because I assume platinum and gold go through the same tax structure as it is post GST. But even then, the jewelry being expensive, is it because the metal content here is more? And clearly, there is no 24-karat jewelry. So clearly, the gold jewelry has a lesser content in that sense. How do you read that?
Right. So one factor is most of the jewelry, which is 18-karat, so which has got 75% gold, whereas most platinum jewelry is 950, which is 95% gold. So that's one reason for the price differential. Also, I think platinum jewelry has been positioned to be sold as on a per piece basis rather than the traditional way where they're selling it gold jewelry on a per gram and then a manufacturing charge on that. So it's just the way it's, I think, been marketed.
But do you see that changing? I mean, why isn't platinum jewelry sold per gram and why per piece? Is there...
You'll have to ask the retailers that. Yeah. But I think it may change over time if it gets more acceptance, gains more acceptance by consumers. But as of now, it's still niche. I mean, you will not find platinum jewelry at kind of most all retailers. It will be only a few select ones that are carrying it. But this is changing. I think year on year, more and more retailers are carrying platinum as well. So probably in a couple of years' time, we should see some change.
Oh, I would definitely want to see that change. Yes, I would want to pay by the grammage and not per piece, because that really would count in Indian markets. But Gautam, thank you so much for joining us and giving us that opinion. So that really is the view coming in from Hindustan Platinum. Prices are at a discount, but a good time to start accumulating platinum because the prices have fallen a lot, do look oversold, and perhaps can give you better returns as we go forward from here on. In the meanwhile, we also have seen the gold and silver prices decline quite sharply. We have seen the gold prices make fresh 2018 lows, and the silver prices are trading below $16 per ounce as well. Prathamesh Maloo of Angel Commodities now joins us to talk more about that. Prathamesh, hi. Quite a sharp decline. Of course, silver has seen some buying from those kind of lows, but are you buying yet?
Manisha, no, not yet. I think it has been consistently declining. You talk about gold and silver. I mean, right from 31,000 mark or even 13,500 mark, the gold prices have been falling consistently for the last 13 to 14 trading sessions. I would not be a buyer at this level, taking into consideration that dollar is strengthening for quite some time now. I think it would be better to sell both these metals. I think 30,100 is what we're looking for immediate targets as far as gold is concerned, and as far as silver goes, 39,000 are the price targets that we're looking at. I think both the metals would be better to be on the short side rather than be on the buying side.
How are you also treating the base metal prices? Because much of the trends that precious metals get is from base metals, especially silver, where we have seen some buying in bits and pockets. We did see zinc and lead actually start the day with some gains, not so much for the other metals. How is this sector looking?
Yes, Manisha, I think for zinc, the fundamental story is really picking up quite well. I think with inventories on the LME consistently increasing, I don't think zinc price is going too much higher from here. I think it is struggling to post that 200 mark on the MCX. I think you would further see more pressure on this particular metal. I think 190 is what we're looking at as immediate near-term targets. But then you really have to look how US and China goes off this particular trade and tariffs. I think this would definitely have an impact on lead as well as zinc prices.
How would you look at the copper prices? Because the decline in the recent few days has just gotten more sharper. You know, we were trading at a 3-month lows, and now we're trading at a 7-month lows, and we seem to be breaking those crucial levels on the weaker side. And the state of the economy actually does come in on where the copper prices are trading. With the kind of decline that we are seeing, are you concerned? Are we looking at further declines even from the kind of levels where we are?
Yes, Manisha. I think from the 485 mark to almost around 450 mark, it's been a decent correction as far as copper prices, and on the LME it's trading at 6,600, which really is a cause of concern because it has been consistently falling for last 15 trading sessions per se. I think I would just buy this metal for immediate near-term targets towards 460, but then you really have to look at what is going on in the Escondida mine, and I think possibly July 1st week. I think first or second week when you see possible negotiation between workers, and this would what would possibly drive prices of copper from here on.
All right, so a buy in copper, and that really is some kind of an assurance that we wouldn't perhaps see much of decline for many of those other metals also from here on. Prathamesh, thank you so much for joining us and giving us your strategies on all of those metals. And with that, it's a wrap up on this edition of Closing Bell. Thank you for watching.